Good evening and welcome to The Breakdown with me, Toni Waterman. Here are the big topics we'll explore tonight. Interest rates on the rise as the U.S. Federal Reserve hikes. Rates are climbing higher in Bermuda, meaning mortgages are getting pricier. We'll explore where rates are headed. Plus,
from a fiscal perspective, I think we're at a critical juncture where the government has to make very tough calls.
A sit down with the former chief economist at the Bermuda Monetary Authority with his take on the current state of the economy. We're going to get you that interview with Andy Jobson in just a little bit. But first, let's talk interest rates, because I'm sure that there are a number of you out there that may have noticed over the past couple of years that your mortgage payments have gone higher. And that's because interest rates are going up. And a lot of this has to do with what's happening in the U.S. right now with the U.S. Federal Reserve. That is the central bank. It has been hiking rates. We saw the latest one just yesterday. And because the Bermuda dollar is pegged to the USD 1-to-1, when rates go up in the United States, that's going to impact us here in Bermuda. But at the end of the day, the banks here are setting their interest rates in much the same way that banks in the United States do. And that is, they choose what they're going to charge for loans and what they're also going to pay out when it comes to deposits. But when they're whipping up this secret sauce, they are going to be taking a couple of things into consideration. Going to get a little bit technical here, but hang with me. The Fed funds rate. This is the rate that banks use to lend to one another and also to trade with the Fed. This is the benchmark. Other things that they take into consideration: competition. What's that bank down the road charging on their mortgages? And also inflation expectations, because don't forget, when you take out a mortgage, it's for many years. So you kind of have to forecast what could happen in the future. Now, to understand what's happening in the rates environment right now, we got to hop in the time machine and go back to 2008, because the global financial crisis forced a lot of central banks to slash interest rates. We have some countries right now that are still living with negative interest rates. And the job of those negative interest rates, or very low interest rate, was to make money very cheap so that people would go out to their banks and they would borrow. And then they would go out and they would spend that money into the economy. They would buy that new house. They would start that new business. And money was cheap for a very, very long time. And by historical standards, money is still very cheap today. Then came December of 2015. This is when the U.S. Fed raised interest rates for the first time in about a decade. It was a big deal, and it sent out this message to the market and to the world that the U.S. economy was ready for a rate hike. Since then, including yesterday's hike, we have now seen 9 interest rate hikes. Banks here in Bermuda, they've been raising rates as well. It hasn't been a one-for-one, but when you look across the market right now, you're seeing mortgage rates at about 5.5% to 6.5%. So where are we heading from here? Well, that is a very good question, and there has been a lot of debate when it comes to what the U.S. Federal Reserve is going to do in 2019. But the overall consensus seems to be that the Fed is going to pump the brakes a little bit when it comes to interest rate rises, which means that we could see something similar happen here in Bermuda. To give us more information on what is happening and what we could expect going forward, I'm joined now by Michael Neff. He is the managing director for Bermuda at Butterfield. Michael, thank you very much for joining us this evening. I want to start off when it comes to the rates. Yep. What's the secret sauce? What goes into it for Butterfield?
So as you mentioned, because of the dollar being the peg for the Bermuda dollar, and that's the bulk of our deposit base. So we don't have here a central bank of Bermuda. We don't have a lender of last resort. So we don't have someone, a governmental authority, setting interest rates. So we look to the Fed, given that's where we would look the U.S. banking system for funding if we needed it. So that becomes the direction we steer in. In terms of what we do here, it's very similar to what you were describing. I think in addition to what you mentioned, we're going to look at loan demand. We're going to look at deposit activity and general economic activity and make some decisions. We've done a number of rises, but we haven't done it every single time. And the other side of that equation is the deposit side. And we have raised rates on our savings accounts. Our fixed term deposits have gone up. So it's a balancing act. After 8 years where interest rates were at the floor, the Fed funds rate was at 0, and the bank faced a very compressed period of earnings from our interest.
What's the strategy going to be going forward? If we see that the U.S. Federal Reserve is going to hold off or push the pause button, would we see something similar here in Bermuda?
Yes, I believe you would, yes.
Okay, I need to ask you something that happened just last month. This is coming out from the throne speech,
Yep.
and there was some very strong language in that when it came to mortgages and the rates that banks here in Bermuda charge. And they were saying that the practice of imposing U.S. interest rates on Bermuda mortgages, the effect has been to drain hard-working families of disposable income. When you look at the average 30-year mortgage in the United States right now, it is below 5%. And correct me if I'm wrong, but when I was looking at your website this afternoon, it's 8% on a 30-year.
Right.
Why the spread?
There are a number of factors around that. Your average 20-year mortgage in the States is probably today 4.5. Our base rate is 5.25, and we move from there. The reason for the difference are a number of factors. First, back to that lender of last resort. So we don't have access to the Fed window the way large banks in the United States do, so that's a factor. The other factor is the cost of doing business here. So we have, just as many other businesses here, face higher costs for almost everything we do than comparative to the United States of America. So that has to get built into the spread. The other factor, which I think is important, again, not having a Federal Reserve or a central bank here, is that we have to have more capital set aside. And to have that kind of capital, you have to have profit, because it's profit that creates that capital. So you add all those factors together, and that is why you have a higher interest rate environment in islands like Bermuda. If you look at Cayman, they're directly tied to Fed rate moves. So every time the Fed rate, it just automatically goes. So at least here in Bermuda, we have some discretion, which we've been using to try to manage that.
But couldn't some due diligence on the lending side then negate some of the perhaps non-performing loans or having to cover these bases that a lender of last resort could potentially do?
So we do extensive due diligence on all our loans. In fact, our lending requirements are intended to be pretty stringent. The reason for that is when we lend money to someone, it's not in our interest to have any kind of problem come up.
Right.
So it works for the borrower and it works for the lender to have it all come out fine in the end. I think the days of doing 100% loan to value at very low interest rates, that all sounds great until the environment changes, and then you see people struggle to pay their mortgages, and then you see banks in positions where foreclosure might become necessary.
Yeah, which we saw during the financial crisis.
Yeah, exactly. And we don't want that here.
The other thing that came out in the throne speech was this idea of abolishing the stamp duty when people want to refinance their mortgages so that they could potentially shift that mortgage to a lender that's offering more attractive rates. How do you think this is going to change the competition dynamics between the banks here if that competition cap is lifted?
So this was actually something we discussed with the Premier before it was announced. It was something we endorsed with the Premier. So we're absolutely fine with that. It creates healthy competition. I mean, the island wants a healthy banking sector, and part of that is healthy competition. So we actually supported that.
Do you think that in the long run it could actually bring down rates?
It might. It depends. We live in a competitive environment, believe it or not. I mean, there is a perception that there isn't competition for mortgages here. So we wrote $65 million worth of new mortgages last year, and we're competing against the other banks every single day to win that business. So you have stated rates, and then you have individual customer situations, and the rates can vary on an individual basis. So I can assure you that there's plenty of competition.
The other thing that people look at when they're choosing a bank sometimes, maybe not so much now where we have very low interest rates, but is the deposit rate, how much money they're going to earn when they keep their money at the bank. There is quite a spread between all of the banks here when it comes to the deposit rate and the lending rate.
Right.
Do you think that we'll see a narrowing at Butterfield between those two things?
So I think if you've looked in the last few rate rises, we have moved rates on fixed deposits. We think that's an important part of the equation. We are coming out of an 8-year period of time where the net interest margin spread, so that's the spread from what we pay on deposits and what we get in loans, was very compressed. And the purpose of the wider margins that you see today is really a normalization of where banks were historically. So there is some perspective to be gained here that for 8 years, that was not a normal environment, and banks really struggled, and you're now seeing a normalization. But, you know, Fed funds floats between 2 and 5% historically, and today we're only at 2.25.
Right.
So actually, you know, we are still in the process of recovering out of the Great Recession, and you know, I think the spread is prudent. Banks, you want your banks to be making money. We've restored a dividend. It's allowed us to do acquisitions to grow internationally. It's allowed us to invest in staff in terms of their development and their compensation. A whole host of things that you want a healthy bank doing.
Yeah, and a lot of people would say that the health of an economy you can judge by the health of the banks. Thank you so much, Michael, for joining us. Michael Neff there from Butterfield. We're going to head off for a quick break, but when we get back, a sit down with the former chief economist at the Bermuda Monetary Authority. Now that he's on the outside looking in, what's his take on the current state of the economy? I'm going to ask him next.
New Toyota Rush, Bermuda's biggest SUV with 7 seats. There's always plenty of room. Available at Bermuda Motors.
From happy beginnings and life choices that we make along the way,
Colonial protects your lifestyle with the best insurance cover at the best possible price.
health insurance with far-reaching benefits,
Family protection and long-term financial plans.
business insurance and generous employee benefits.
For happy beginnings to happy ever after, visit CGIGroup.com.
Colonial, where people come first.
Welcome back to The Breakdown. Well, the Fiscal Responsibility Panel released its latest report the other week, and it was far grimmer than the panel's previous assessments of the Bermuda economy. Their top concern, the island's shrinking workforce and rapidly aging population. On current trends, the panel said that Bermuda is heading for a downward spiral of demographic and economic decline. I recently caught up with Andreas Jobst. He currently works at the World Bank, but a few years ago, he was the chief economist at the Bermuda Monetary Authority, and I started off by asking him for his assessment of the economy.
First of all, we need to be clear about the fact that Bermuda policymakers operate in an environment that is heavily constrained, and these constraints on policymakers are structural, not cyclical. In other words, they've been around. We operate in a currency board regime. That means monetary policy is non-existent, fiscal policy is heavily constrained. So in other words, we need to focus very heavily on price stability as a signal of how well the government does in terms of fiscal responsibility, while keeping a watchful eye on the financial sector, that banks efficiently operate in a safe environment. Debt has the incline we've seen in the rise in gross government debt and the debt service capacity diminishing. I think we've seen a slightly more benign picture than we saw a few years ago. At the same time, of course, the tax base could be improved. So overall, from a fiscal perspective, I think we're at a critical juncture where the government has to make very tough calls as to how to proceed going forward, whether we'll see more spending for the benefit of more social inclusion, or whether we'll turn on the screws and take the scissors to some important budget items, which might be controversial.
A lot of the conversation around how to manage this debt pile and how to service this debt and bring it down to manageable levels really focuses on cutting spending or raising revenues. How do they tackle the productivity part of that equation?
Yeah, I think, again, when we look at such a challenge, we tend to be very focused on the short term. And obviously, it'd be easy to slash the budget, ignoring the fact that a lot of investment carries a lot of productivity gains that are embedded. So we call that embedded productivity gains, especially when it comes to investment in social and physical capital. Social capital, I mean education, health, and physical capital, the resilience of infrastructure. So the more efficiently people can move from A to B, the more easy it can bring in tourists via the airport. That, of course, helps productivity. Keeping a perspective and combining both, making sure that the budget is sustainable without increasing the debt pile exists already, but at the same time investing strategically, preferably in a budget-neutral way, in infrastructure that has productivity gains for the future. Give you one particular example: education. Education is one area of spending that is in Canada to be on a chopping block. However, this myopia policymakers sometimes have in cutting spending on education will hurt them in a generation from now. But we know that the moral logic kind of fades with temporal distance. So what we need to do is bring the future forward, say, well, the future generation of Bermudians deserve, when they enter the workforce, to be as productive as possible. So you need to invest in education now.
One of the big issues is that there's this aging population in Bermuda, and there's increasingly and exponentially going to be a lot of people that are senior citizens, 65 and older, that are going to be exiting the workforce and then kind of being this taker from the system when it comes to healthcare and benefits. But I wonder, in terms of productivity, if actually having fewer people in the workforce would then force a productivity jump, because then it pushes people to take on more of those jobs or to streamline their operations.
The current ratio I've seen in probably Bermuda is the same as it is in the US, in Europe. In Europe, even more severe. The old age dependency ratio
it's about 25
is
right
about,
now.
Yeah.
But it's going to be going up. The projection is that it's going to go up to 40.
Yeah. So if that's true, then clearly future generations have to shoulder a greater financial burden when it comes to supporting the elderly. Those productivity gains in a service-oriented economy requires that we upgrade our education level. And by we, I say, referring back to my experience, as a chief economist at the BMA a few years ago, where we looked at this as well with the finance ministry, to improve the overall standard of education. I think that's one key aspect where we can get those productivity gains. In the US, we see, though the problem is less pressing given the immigration that happens, where students are selected for particular programs such as STEM, so science, technology, engineering, and mathematics. I think Bermuda could do more in those areas to really support students that excel in areas that are important for a service-oriented economy going forward.
What type of immigration reform do you think needs to take place in Bermuda so that it is prepared 5-10 years down the road as the aging population really expands?
That's been a long-standing debate, and I don't feel that I'm sufficiently competent and fluent on that topic, but I would say from an economic perspective, I think an immigration system works best, is most efficient and most effective if it's transparent, comparable, and reliable. So these three attributes need to be established, and I don't think we're not quite there yet. What I mean, for instance, is an immigration decision could be made on a point system, like in Canada, where individuals are invited to join the workforce based on merit, rather than being in a way dependent on an individualized decision-making process that has its merits when expert judgment is required. But as a general rule, I think there needs to be a more transparent rules-based system based on merit and demand.
A lot of countries are struggling with an aging population. A lot of countries are struggling with high debt. What lessons do you think Bermuda can learn from some of the other countries out there that are dealing with these same exact problems?
I think what a small island economy like Bermuda needs, starved of natural resources, really have a strategic agenda that pushes the service-oriented economy. Diversification to fintech is one example, but I would also say a second leg to stand on would clearly be a green economy, or, given the maritime context, a blue economy, really putting at the forefront the stewardship of nature that attracts the tourism flows onto the island, but at the same time also have a sustainable industry when it comes to energy consumption. Being energy independent, I think, given what we hear from Venezuela, might be a nice thing to have.
Are you thinking green bonds, blue bonds, the insurance industry jumping in on this, because there's great opportunity for them as well when it comes to climate change issues?
Well, a short should I say, a shortcut to some of the things, and quite a practical example could be the Bermuda government issuing a blue bond, like the Seychelles, ideally to the local market. That would also, in a way, take away the FX denomination risk we have for Bermuda government bonds.
Do you think there needs to be a shift in the way that the pension schemes work, that there has to be a mandated amount of money that's invested locally?
Well, either you have a great agility in the Pillar 1 pension system, so the government-run pension system, or you have a Pillar 2 that is mandated and has greater flexibility to invest in high-yielding investment. One thing we should be mindful of with this, in the context of the secular changes in our environment, climate, demographics, as well as disruptive technology, one thing is for sure: capital will lose its value more than it did in the past, because there's more capital chasing fewer and fewer investment opportunities. So a low rate environment is not necessarily good for an underfunded pension scheme. So having a Pillar 2 pension scheme, or even Pillar 3, invest in high yield investments, infrastructure over the long term, I think would be a good thing.
Time now for a quick break, but when we get back, I continue my conversation with Andy Jobst and get his take on fintech. He says Bermuda needs to be careful, but not for the reason you think. That interview in 2.
Win a trip or two to the 2019 Trinidad Carnival. When you purchase a car from Bermuda Motors, your name will be entered into a draw for a chance to win an all-expenses-paid trip for 2, including flights, accommodation, and tickets to the Trinidad Carnival. Visit Bermuda Motors on Church Street or bermudamotors.bm.
Oh dear. If you're unsure where the trail leads, you're on the right path. Go to Bermuda.com.
Ever wondered what smart health insurance feels like?
Colonial's 24/7 worldwide health insurance does most of the thinking for you.
1,500 CGI health claims are settled daily.
60% of claims settled automatically.
You can access your health plan almost anywhere, anytime.
And have smart wellness with online data tracking.
And more provider choices for you and the people who matter most.
Premier Health is smart health insurance, and it feels good.
Colonial, where people come first.
Welcome back to The Breakdown. Well, as you know, the government has singled out fintech as an avenue for economic diversification. In my continued conversation with Andy Jobst, I ask him if fintech is the right way to diversify the economy.
I think it's one of the ways. The fintech certainly has inherent attractiveness, given that the disruptive technology has been at the forefront of many policymakers and businesses. I think Bermuda's got 3 key benefits that in favor of fintech as opposed to competitive advantages. One, a remote location. In this instance, plays to the benefit of a jurisdiction. You're far away from any trouble spots. So for safe data storage, then Bermuda is located strategically on top of a fiber optic cable to South America. And then thirdly, I would say a reliable and flexible regulatory system that can accommodate the specificities of fintech and the demands those very rapidly growing industry has on a jurisdiction. I think they're all taken together. I would say, however, on a cautionary note, one concern I would have is that we need to be mindful again of the monetary regime Bermuda operates under. There is, of course, some household money deposits flowing into cryptocurrencies, but you don't want these cryptocurrencies really to upset the system, the hard peg we have. And if deposits flow away from the banking sector, the BMA will struggle with the current monetary regime. So we need to be mindful of cryptocurrencies entering the Bermuda market.
IMF chief Christine Lagarde came out a couple of months ago and warned about the rapid expansion of Bitcoin and other cryptocurrencies. And she encouraged governments to consider launching their own cryptocurrencies. Would that system work here?
The reserve currency system lends itself to a stable currency. So I go back to the previous answer that in an environment where you cannot grow your deposit base via monetary stimulus, right? So the BMA cannot print money whimsically, but it's related to the dollars that flow into the economy. A cryptocurrency that follows that principle could work. What you don't work is basically having private cryptocurrencies take away the deposit flows to banks, and that way degrade the reserve currency mechanism we have in place. So what this means is that an Bermuda dollar could in fact work. The banks would still stay in control of the deposit maintenance and lending, etc., while the BMA can still back up the Bermuda dollars in circulation with the e-currencies that are being printed, if you will.
You worked at the BMA for 3 years. You went on, you worked at IMF, World Bank. But a lot of the issues that we have been talking about would be issues that would be right in your line of fire and on your radar when you were here before you left in 2014. I'm curious how the potential solutions to these problems and the way that you look at these problems has changed now that you are on the outside looking in.
What I come across in my line of work now is really key structural issues. And I think Bermuda really needs to focus all its efforts on structural issues. Given the heavy constraints on fiscal policy, we cannot just stimulate the economy with tax cuts. Not only is it not that sustainable, but the government faces real constraints when it comes to borrowing. You cannot FX borrow unrestricted in a currency board regime. You need to sacrifice some pillars of your, should I say, policy framework that operated quite well, so why jeopardize that? So rather go to structural policies that means education, health, infrastructure with a long-term focus, and try to control spending as much needed. So in a budget-neutral way, it is possible. It has been done before. Why shouldn't it work here?
Besides all of these internal issues, there's a lot of outside issues that Bermuda has to contend with as an importing nation, as a small nation. What's going on with the United States and China right now with this trade tariff? $360 billion worth of goods traded between the two now have fresh tariffs on them. How is that going to impact Bermuda?
Yeah. Well, we've got a bit of a respite because China and the US seem to have agreed to postpone, or the US has postponed tariffs on an additional $200 billion worth of goods from China. At the same time, China is opening up to some of the US demands. So I think for overall trade or disruptions to trade have direct and indirect effects. The direct effects are quite obvious: growth. IMF estimates suggest that with the current measures adopted, we could see an impact once also planned tariffs are being implemented, an impact on global growth of up to 1 percentage point, which is quite significant. So there's a direct effect, and if the US growth flows is lower, then at the same time, Bermuda will suffer as a direct pass-through effect. There's also an indirect effect. Tariffs will increase uncertainty. Uncertainty leads to lower investment. The numbers, the transmission is about 1 standard deviation increase in trade uncertainty will reduce investment by about 1 percentage point. Again, very significant because investment translates almost 1-for-1 into growth. But at the same time, we also have disruption to supply chains, and it reduces the ability to fund cheaply. In other words, the cost of borrowing for the government will go up, for households will go up. So overall, the growth and inflation outturns for Bermuda will not be pleasant.
Well, the U.S. and Chinese trade negotiators are set to meet in January, so hopefully a resolution can be found then. That's going to do it for this edition of The Breakdown. Thank you very much for joining me. If you missed part of the show, The Breakdown rebroadcasts on Sunday and Wednesday mornings, and you can also catch it on the Bermuda Broadcasting YouTube page. Next week, we're letting our imaginations run free. Quantum computing, mind reading, and innovative new ways to fight cancer. We have a roundup of some of the most interesting conversations from TEDx Bermuda. I hope you'll join me for that show. Until then, Merry Christmas and take care.